Yeah, got that. We'll see it here. Okay. Oh, I think something in the schoolyard there. So it didn't really.
All right, good evening. We'll get the show on the road. Hope everyone's having a good, nice long weekend. Just want to make sure all my sound is good. It looks like we are okay on live, so let me just double check real quick. Yeah, I think we're good. Yeah, I think we're good. All right, yeah, we're fine. All right, how is everybody? If you can hear me. So it looks like we're good on Discord. Screen looks good. All right, as always, if you have any questions, ticker requests, feel free to shout them out, and we'll be sure to take a look. As always, we will definitely be looking at things from the top-down perspective, and from there we will be good to go. All right, there we go. I think I fixed my audio issue on YouTube, so we should be all right. All right, so let's get this started. First, we need to be aware of the major economic calendar event this week, and no doubt about that, Wednesday should be on everybody's calendar. It should be written down somewhere. It should be on a sticky note listed on your monitor somewhere. Just know that Wednesday at 2 o'clock, we get the FOMC rate decision followed by the press conference by Jerome Powell. Now, the expectation here, if we pull that up, the expectation is that they are not going to raise rates. You can see that our current target rate is 525 to 550 basis points. That's pretty much the probability is that they're going to keep it that way. For this meeting. The next meeting isn't until November. We get plenty of data between then and now, and you can see that there is a slight little bump. It's actually kind of lowered here compared to last week. We can see that it's down to about 30%. Last week, this was about right at about 40%. So for now, we might be entering the possibility that the Fed is finally done raising rates. Of course, we need to have that communicated to us by the Fed. The Fed has done a pretty good job at communicating, with the idea that they're going to continue to rely on the data that comes in and go from there. But as far as everything that we're seeing, the jobs reports, they continue to get revised down. Now, we did, we continue to get the jobless claims. That continues to be kind of, a problem. Energy is a problem. So there's still some inflation data that needs to be taken care of, especially energy and housing prices. So that seems to be the big troubling area for the Fed to kind of battle on, not to mention food prices and all that kind of good stuff. So we definitely kind of have to pay attention to that as things continue to move in. As far as earnings season or earnings reports goes, not a whole lot. We got AutoZone on Tuesday morning. We got FedEx in the afternoon on Wednesday after all that rate decision and Powell. And then after that, it's kind of smooth selling. I know we got a pretty decent day for Thursday. We got the jobless claims, existing home sales data, and so on. So, this week it starts out kind of quiet, but as the week progresses, things pretty much build up from there. So we definitely want to, keep our eyes and ears peeled, especially on Wednesday. That's going to be the crucial day. Most likely, I'm personally probably not going to be trading on Wednesday. That's just my personal prerogative. I don't try to get involved in that mess. I'll leave that up to you, of course. I believe Ace will still be live on Wednesday, but just know that a lot of us, we don't trade that mess. It's too choppy. It's too volatile. Anything kind of goes. But I know a lot of y'all do anyway. So, just, play into your strengths. That's all I'll say about that. Let's look at the S&P here, the futures. Over these past 2 weeks, we've hammered in the point that we're pretty much stuck in a box, and your best friend is to really much day trade. You can still swing, although I do sway a lot of caution in that area just because we are stuck in a box and we're not getting clear direction. We're pretty much sideways, and we'll get these pops, and then we get these pops higher, then we get these pops lower. It's just a little bit of a mess out there. So day trades are a lot easier to come by than swing trades. If you are swing trading, keep your time frames smaller. Use at least an hourly time frame. You shouldn't be swinging longer than a few days at most. That is just to protect you and to play a little bit defense whenever you are entering plays. So definitely want to mention that. But as we can see here on the futures, we're really still just stuck in this glorified box. We haven't made any progress. We've noted, we had this nice weekly squeeze here back in March and April. That squeeze fired long and ran its course, and since then that momentum has shifted, and we are looking at this digestion period where price just remains stagnant, and we're just sideways and setting up for a new squeeze and looking for the next general direction. Now, you could argue that we are in this mini box here between 45.50 and 44.35, give or take. So until we break above or break below these big ranges, we're still stuck. There's no progress to the upside. There's no progress to the downside. But what we want to do here at this point is really look for evidence to give us cues as to what might be possibly unfolding under the radar. So let's take a little bit of a deeper dive here. Let's just go into the SPY. I know we looked at the ES futures, but let's translate that over into the SPY, because most of everybody who trades either uses the SPY or they use the cash settled SPX. So if we look at the SPY, we can see the same thing here. That weekly squeeze ran its course. We're pulling back in. We're consolidating. We're in this digestion period. But, we could give some, in fact, some of the evidence that I'm going to show you does give more focus, more points towards the bears here. You can see that we've failed to break out above 453.5. That's point number one. And you can see on Friday, we had a nice big down move. Granted, it was monthly OPEX and quad witching. That gave us the higher volume node here. Probably some reshifting and rebalancing going on there. If we look here, the candle is inside weak, so we didn't make any progress last week to the upside or the downside, but we did close closer to the bottom of the range here at about 442.75. That's really what I'm going to look for. If we do get some continued downsize here, be on the look of this breakdown between 442.50 and about 442.75. We could draw another level here at this big bar here, just to give it a range here, a zone. So really 442.50. If we break below this, that could send things back down to possibly even retest the weekly 21 EMA, which would put you right back at this nice little support zone down here at about 435.32, as you can see highlighted. So that's going to be my crucial level here for next week. If we start to lose 435.32, that could definitely be a pretty negative sign for the market.
to maybe even send us to the bottom of the range at about 431 and 426. So the levels are definitely there. Now, as far as the upside potential, step one is, we still have to get above 453.50 here for continued upside. So still, we're just kind of in this mess. If we look at the daily signals, it's pretty much flat. You see how these moving averages, so to speak, it's an oscillator, so they do oscillate. You can see that you do have this crossover between the green and red, and they're just kind of all over the place. This just tells me there is no trend, so this confirms the price action for me here. There is no trend right here, and we just got to wait for the next signal to show us the way here. So for now, day trades for me, as looking at the SPY, continue to be your best friend. But if looking at 442.50 for downside potential and looking at 453.50 for upside potential. And then, of course, if you get that breakdown below 431 and 426, things can get really ugly really quick. Let's look at the RSP. Now, the RSP, this is your equal weighted S&P 500. We bring it up every now and then. And as you can see, not everything is good underneath the sun. You can see that we do have this negative crossover between the 50 and the 21. The white line is your 21 EMA. The blue line is your 50 simple moving average. And, this tells us that, market breadth and the overall market, other than big tech, is having a little bit of a struggle. We can see that you're starting to get that 21 rejection, and the 21 is starting to move lower, whereas the 50 simple moving average is starting to flatten out. Now, there is broad-based support down here at about the 146.50 level, which also gives us the year-to-date VWAP and the 200-day simple moving average. So if we do have this breakdown here below this 146.50 mark, that would definitely be a very naughty sign for the market and would give another point to the market bears. So we definitely want to be aware of this developing situation. Of course, they could always come back in and bounce off of that support level and move back up to the 50-day. But, if you are a market bull, you definitely want to see this get back above 150, 151 zone to start out. So we definitely have to be paying attention to everything else, because everything else isn't all that pretty out there. So this gives me my next point. When looking at the broader market here, a lot of things out there aren't that pretty, so it seems. So let's move on to tech-heavy NASDAQ. The NASDAQ, of course, has been an interesting one with Apple and mainly Microsoft and all the other tech guys, Tesla, you name it. And we'll take a look at those individual FANG names in a minute. We can see that on big tech, no progress here either. There's not much really change from the past 2 weeks. We've gone nowhere, both from the upside and to the downside. I will say that, same thing here, inside week last week. You could put a level here at 369, dang she fine. 15 level. If you do get a breakdown below 369, you could get some further downside potential, especially now that we've gotten a daily close below the daily 50. You can see that the oscillator is confirming that there's just simply no trend here. We're sideways. You can confirm that also with the moving averages. They're crisscrossing all over the place. Depending on whichever ones you use, put a fast moving average with a slow moving average, and you can probably see that they're starting to dance around each other. So that just tells me this is a sideways market. Now, granted, there are individual names within the NASDAQ that are acting relatively strong that we'll take a look at too here. But for the most part, as far as the overall indices, you don't have clear direction here. But, since we closed at the lows on Friday on that big volume day, I still want to give some points to the market bears. If we go over to the IWM, this is where a lot of the problems are occurring. Now, the IWM has been an interesting one. Year round, you could argue that, well, Brian, this does look like a head and shoulders pattern that we're forming here. True. Now we still need to break the neckline, which would be down here at about the 180 mark. But the main thing here that we need to point out at is we're hanging on by what seems to be just a tiny little thread here for the small caps. And if the small caps do move lower, that could pressure the rest of the market to follow suit. So we'd want to pay attention to the small caps here to see if they do get a breakdown. Now, what I would be looking at here for the small caps is if we get a breakdown below the 200 simple moving average, which is this red line, and also that confluence of the year-to-date moving average, which is this dotted blue line here, right at about the 183 mark. So if we start to get this close below the 183, if you want to be more conservative, 180, then this most definitely becomes a pretty nasty short. To confirm that, you can see that we do have a negative cross down below the 21 EMA crossing below the 50. We can see that price came back up to the 50 as well as the 191.50 resistance level got smacked on down, and that's just where we are at right now. So we're just kind of stuck between a rock and a hard place as far as the IWM goes. So we definitely want to pay attention to the small caps this week to see if they can give us some clear direction. Now, when I look at small caps, I also want to look at the regional banks. They are one of the bigger components of the IWM. So when I look at the KRE, yeah, it's almost like this interesting inverse head and shoulders pattern that's still technically in play, but we definitely have to see a breakout above 49.42. This is a setup that shouldn't be new to you. We've kind of gone over this one quite a few times, and now we're just kind of basing out on this support level at 42.76. But if we start to see cracks below this, then I'm definitely going to look to see if we can play some puts to the downside to about that 40 mark. Now, there are individual regional bank names that you can look at, such as PNC, Truist Financial, Wells Fargo, any of those guys. So PNC, a little bit stronger here compared to the KRE, so that's kind of interesting. But yeah, as in general though, the KRE, yeah, pretty nasty stuff here. We just need to look to see if it closes below 42.76 to get us some sort of downside, and in turn, that could possibly give us enough momentum to push the IWM back below this 183 mark. So yeah, definitely have that level marked on there. Not much to really talk about as far as the Dow components goes. The Dow's pretty much the same beast here in regards to the main indices. Mainly maybe a little bit ahead of the others because you are starting to form a new weekly squeeze after attempting to fire long. You're getting into a new squeeze here. The Dow, yeah, you got a daily squeeze that could be interesting. What I would want to see here on the Dow is a break above 351. Let me go ahead and mark that level 2 while I'm at it. Break above that high, that would be a good indication for the Dow to continue to move higher, but I definitely don't want to see it break below 345.50. That could send us much lower because we didn't really build too much of a base within this mini box here. Maybe you got some right here at about 344.50, so we could call that a zone, but definitely want to pay attention if the broader market does want to be weak. I don't think we'll get any surprises from Powell, to be honest, to kind of send things down. So we're kind of in this hurry up and wait mode to get through the Fed and see what they want to say. And we'll kind of go from there. But if we look at the transports, though, you know, according to Dow theory, you want to pay attention to the transports and see what they're doing. Transports are actually leading the way down here, which is a gross signal and a little bit of a negative divergence. In general, the transports are moving lower, whereas the Dow is kind of stagnant. But the transports in themselves can, signal that things are not quite as strong as they seem here. You can see that we did get that break below the moving averages. You came back up to the 21 EMA and you cracked down. Now you do have a little bit of an interesting pattern here, a little bit of a tight consolidation going on, but we still have negative thrust and a cross down on the oscillator. So with that regard, you know, this does look a little bit bearish to me, and I would put another point in the bag for the bears here, and we would need to look for a breakdown below 240 for this to move down to about 235, 234.50, which would give you a retest of the year-to-date volume weighted average price as well as the daily 200. So yeah, transports, that would give you names like UNP. Let's see, you got FedEx in there as well. Let's see, who else do you got in there? You got Uber. Uber's an interesting one. Yeah, UNP. Let's see, you got FedEx. Let's see, you got Uber. Yeah, FedEx is interesting. You do have earnings on FedEx. That'll be a big one coming up this week also. Let's go to Uber. Now, Uber has definitely been pretty interesting and actually pretty resilient in itself. This probably won't be one that I watch this week, but it is relatively strong. But if this starts to break down, that could be a naughty sign. You do got a pretty nice base down here at about the 43 mark. So if anything, you're just kind of stuck between 49.50 and 43. So we'll see what happens with Uber in the coming days. Let's see. Let's move on, though. Kind of keep things going on. TNX, these are your treasury yields. Yeah, this is one of the big headwinds for the market. You can see that rates are right at about the 4.3 mark. We are at the highs from October, believe it or not. This is something that everyone should be taking note of. This is a big resistance level, but if we start to break out, this thing could easily shoot up. And my long-term target, it's not on this chart. I think it might be on my other chart. My other chart, it does have a target of about 5.0. There it is. Yeah, here we go. Let me bring this over for you so you can see it. Not my email. Y'all don't want to look at my emails. Y'all might. Just kidding. You get those weird emails. Where'd my chart go? I somehow lost it. I lost my tab. I guess I can reopen it. That's annoying. Did I minimize it somehow? There it is. I dragged it. There we go. So this would be a measured move off of the swing high to the swing low that we had back in April. And that gives us a target of 5.0. That would mean interest rates are at 5%. That would be pretty wild, wouldn't it? So yeah, if we do get this breakout, yeah, this could slingshot, and then we need to pay attention to that yield curve also in the time being. Let's see. So that is the big problem to kind of be concerned with. You can see that it is overall in a bullish trend. You got the sloping higher moving averages, 21's moving higher, the 50's moving higher, and the 200 simple moving averages pointing higher. You did have a nice little weekly squeeze here that fired along and is still continuing to do so. Now, if we do get interesting news from Powell, we could get this smackdown here and rates could just move lower, which could be a nice little tailwind for stocks. But the other component to this story is the dollar. You're going to miss some what on Ford? If we look at the dollar continues its march higher. Give me some analysis on Ford. Okay. That's not what you typed. You said a different word that I'm not going to read because we're on live public. As we can see on the dollar continues to trend higher. You almost have the golden cross on the dollar where the 50 might be crossing over the 200 in the next few days. If so, that would be a negative sign there for the overall market. Now, we still need to clear this 105.80, 105.90 level. That would give us a break back above the next swing high. And for the overall market, that would definitely be a very, very bad sign. But as you can see here, you got a nice little mini bullish structure here. You almost got the golden cross on this. Your oscillator is trending higher. You have positive thrust signals all the way up here. Now you are coming up to the crest of the oscillator on the thrust, and remember, oscillators oscillate like so. So we could be at a certain interesting peak here as far as the thrust goes, but for the time being, we still have positive thrust, and this could easily, what tends to happen is that this will stabilize and stay in this zone and trend. So we definitely have to be mindful of that situation as far as the dollar goes. This would be a pretty rough sign here for the overall markets. So that gives me another point for the bear case. And then, of course, if we take a look at bonds, maybe we find some relief there, but I'm afraid we don't. The bonds are painting a definitely nasty picture. The bonds are absolutely in the catacombs here, and this is actually a negative divergence when you compare it to stocks and the S&P and the NASDAQ, whereas things are stabilized within the SPY and the NASDAQ. The bonds continue to move lower, which is definitely a naughty sign here. You can see that the sloping 50-day period moving average, as well as the fast-moving 21 EMA, they're all trending lower. Now, we could possibly come down here and test that 117.19 mark, maybe give ourselves a double bottom, and get a relief bounce from there, but there's no signal of that, of course. Everything is pointing steadfastly lower here for the bonds, and we still have a negative thrust environment. Remember when I talked about just a second ago with the dollar, how the dollar can come up to the upper end of the oscillator and trend like this. Now, if you look at this on the bonds, you see what's happening. You have this negative thrust signal, and you are trending down here in the lows. That just confirms the trend is moving lower and swiftly lower. So this is a very troubling area for the market that we need to pay attention to almost on a day-to-day basis. So definitely pay attention to what the bonds are doing intraday. There's a lot of bear signals out there. I haven't found one bullish signal other than the fact that markets are stuck in a zone. But it's kind of dangerous looking out there. So if you ask me, if we look at the LQD, remember this is your corporate bond, so to speak, with good credit. So compare that to the HYG. That's your junk bonds, the junk of the junk. And that's, if they're buying up HYG, you would think the LQD is also moving because the LQD is a lot better. But as you can see, the LQD is absolutely not doing anything either. You actually got a weekly squeeze here that's trying to continue to its momentum. You got a bearish signal here on the thrust. The oscillator is also in a bearish positioning. Same thing with the daily. You can see the 21 sloping down, the 50s moving down, etc. It just can't break above. If we look at the HYG, which is your junk bonds, it's not doing anything. You're not getting much of a signal here, so we won't pay attention to it, other than it's just kind of confirming what the rest of the market is doing. It's just stale and stagnant, but you do have the overall broader weaknesses out there with the dollar, the rates, the bonds. The IWM's at a breaking point. RSP, equal weighted S&P 500, is looking pretty nasty. If we take a look at the VIX has done a lot of back and forth. We did get a nice little move here on Friday. We'll see if it gets any kind of follow through. But yeah, you're not breaking down either. But if we do happen to break above 14 and get a close above, well, we'll call it 15. If we get a close above 15, that would definitely be a concerning situation. We can see that the daily squeeze has ran its course. It looks like it might be time to set up a new squeeze, which it is doing on the weekly. So we definitely want to pay attention to that. I'll probably pay attention to it like on a day-to-day basis. It is in one of my market internals that I'll watch on a daily basis. If the VIX is rising, that means there's overall market pressure on the table. So yeah, VIX not really clear here, other than it's at a possible big support level down at the 1270. But for the most part, as you know, the VIX hasn't really done anything all year long, other than kind of be stale. So it's a little bit of a harder read here. Let's look at let's see, is me. One second. The XHB, that's what I was trying to think of. XHB, this is your home builders ETF. It has your names like DHI, Lennar, etc. You can see that the home builders are finally losing its luster here. We came up to almost all-time highs there at the 86.60 level. But we did get that breakdown here on pretty large volume too. So the home builders are also starting to struggle. That would give you names like DHI. If we take a look at that one, let that load up. Yeah, DH Horton all the way back down to its prior breakout at 110. Pretty much the ship has sailed. It sailed and came back in. So if you're looking into getting into DHI or Lennar, you kind of missed that run. LEN, same thing. Lennar earnings popped up. We'll see what direction it gives off. You got Linux. What is that ticker? LII, I think. Yeah. LII, Linux. This one's hanging on by a thread, but still trending pretty higher. But you are at like +4 ATR on the weekly. You got CAR, Carrier Global, CARR. This one's a little bit busted too. So we definitely want to kind of pay attention to these home builders to see what they're up to, because it just does not look too good here. So, all right. Let's see. Oh, not HYG, XHB. Sorry, I was reading something offside. Yeah, home builders, not too great here. Be mindful of that too. So the overall point that I'm making here after looking at over everything is, where are your bullish signals? Because I'm not finding a whole lot. If you can find some bullish signals, feel free to point them out to me as far as the market internals and maybe even some of the rotation. But as far as everything else goes, yeah, there's not a whole lot. As far as sectors go, yeah, energy continues to be impressive. You are at resistance, though, at 93.43. If we look at crude oil continues to be pretty darn bullish and trending higher. As you can see, it is just nonstop as of lately. So that is definitely going to be a problem for energy prices and your fuel tank and inflation. So until they can get grips on energy, then there might be a little bit of an issue. So, big oil names such as Phillips 66, PSX, you did make lifetime highs. Still wouldn't chase at this level. I would let it come in if you can and see if we can go from there. Same thing with CVX. CVX has had kind of stale here. Needs to break above 168 here. Let me draw that level for you. It's pretty noticeable though. 168, 169. Once you get above that, you're pretty much in smooth sailing. You got COP, ConocoPhillips, had a nice little blip higher here. Yeah, about that 125 mark, but you've got a nice little shooter candle here, so you could come in. Let's see. Yeah, we'll take G-Unit made a 10% bagger on PSX shares. There you go. Nice move, nice play. Yeah, we've been talking about energy for a while. I've been in and out of a few energy plays myself on my personal long term, and yeah, just kind of reaping that reward. So yeah, good job. So we'll open up the chat here for some analysis here, and I'll give you some of my names that I'm going to be watching this week. But for me, the main play for me this week is going to be the indexes, and if you haven't guessed it, it's going to be the FANG names. We need to see what the big boys are going to be doing. G-Unit wants some analysis on Ford, so we'll take a look at that. He originally requested anal on Ford, but I don't think I can do that. So we'll look at the analysis on Ford. Here we go. Ford, you got a little interesting rounded bottom trying to work. You see, I got a lot of lines here on Ford. It's something that I chart a decent amount. You did have this nice little trend line here that got busted. You finally broke out. You're having a battle with the daily 200. If you see that here, let me clear that up. There you go. Zoom in a little bit more here. This is your battleground. Your daily 200 at about 1275 to 1280. If you can get above this, or not really get above it, just have a daily close above that. That would be your sign there. But if we look here, this is kind of stagnant. Green and red are flat, so there is no trend. We don't have a new signal on the daily. So that is kind of naughty. Yeah, Ford, and we got that strike going on with the UAW. The White House is sending their negotiators over to see if they can't help speed things along with the negotiations, see if we can't get out of that rut and what the union is asking for and all that kind of good stuff. But it definitely doesn't help the economy if all the auto workers are not working. So now if we look at the hourly, you got an interesting setup, but again, you got to get above 1278. If you get above 1278 on a daily close, that could open up the door for 1345. That would be my next point of attack there, 1345. So that would give you a nice little 70-point move there, which for Ford, that's a lot. Ford does not move a whole lot. Its daily ATR is very small. Late join, did I already go over IWM? You did, but I'll go back over it in just a second once I catch up to these requests, and we'll get to it. Let's see. Give me your thoughts on ARM. Yeah, now ARM, it is a newly issued name here. Anytime we get new IPOs, my thesis is zoom in, put in a volume weighted average price at your opening candle here, and right now you're trading below the VWAP. So for me, you can't really do much here. This would be a little bit bearish, but also you could take it in both ways. If you're trading above the IPO, that's bullish. If you're trading below the IPO, that's bearish. And if you can see here, the close on Friday puts you back inside both of those ranges. So you're just kind of stuck. In my opinion, you're just kind of sideways, but you are below the volume weighted average price from its IPO. That would be bearish. There's not much to go over. You don't have a whole lot of, you got 2 days of historical data. There are no signals. There are no squeezes. There's nothing here to really look at other than a candle to candle basis. You could argue that you had an inside hourly bar here that broke to the downside. Now that could send you down here to 59.50. But yeah, if you start to break down below 55.50, that becomes bearish. If you break back above 66, that would be a bullish. So until then, yeah, it's a little bit tough to do any kind of analysis here on ARM, other than you had an inside candle on the hourly, you broke down, and you could come in a little bit further, especially if the overall market wants to move lower now. ARM is probably going to follow suit. Yeah, it's just for ARM to be, you want to be looking at long term, do your due diligence, see if it's right for you, if you believe in the company, which we know that a lot of larger companies are looking to be involved, all that kind of good stuff. So definitely do your due diligence, maybe talk to Chris on the side. But, for me, from a technical standpoint, I'm not a buyer at this point. I'd wait to see how things continue to develop. It doesn't look like they offer any kind of dividend just yet, yada, yada. So yeah, make sure it's right for you and your investment plan as far as that goes. Let's see. All right, so there's ARM. Let me go down here. NVIDIA, Tesla, Meta. Let's go back to IWM real quick since Booz is in here and you got 3. And then we'll definitely come back because I want to look at those as well. IWM, like I said, holding at 183. If we break below 183 and have a daily close below that, that would be a very bearish signal. You do have some price support down here at 180. So step 1, you got to hold this. If you're a market bull, you need to hold these levels like your life depends on it, because if we do get a daily close below it, it could signal a nasty flush on the IWM. So it's just kind of stuck between a rock and a hard place, 183 and 190.150. For the bullish move, you have to get above 190.150 at least. For the bears, you want to see this thing break down and let that momentum carry on down, and hopefully you don't get trapped there, bear trapped. But for the most part, yeah, this has to hold. Otherwise, it's it's nasty real quick. And then if you get back into this 180 box, yeah, you're looking for a move back to 170 at this point. You do have a small gap here that you might want to take care of and kind of be aware of also. And if we do get this breakdown, I'm going to be looking to swing some shorts at that point. So IWM's at the very nasty level here that it's got to hold or not hold, to be or not to be. Raise 1. So many ones. Nvidia got trashed Friday. We played puts on Friday for the day trade. It was a nice day trade, and it could have been a lot nicer, but I hit my price target and moved on. And next time I looked at it, those contracts were at $10. So Nvidia, you actually have a small gap to fill here, right here off of its earnings gap, 432.99. We did get a close at 439. That would give you about a 6-point move to the downside to fill that gap. I imagine at this point we do, unless we get some crazy bounce tomorrow and this closes back up above the daily 50. You are getting into a new daily squeeze here on Nvidia after, if you look here on the weekly chart, you can see that weekly momentum has shifted gears here and the momentum has faded. Yeah, it doesn't look too good here for Nvidia. This is actually the first daily close below the daily 50 that we've had in, since August. And as you can see on that day, we actually had this huge power move. So we'll see. Maybe we get a huge power move tomorrow. We'll see. But yeah, they got to get back above the key moving averages. Bullish scenario, get back above 467, get above this right here. Let's go ahead and remove that. Yeah, 466 for the bulls. Bears, you're looking for this gap fill to 433. There's not much price support up until you get to about that 400 level here. So we want to be pretty careful here. Thought I felt a bug on my leg, but it was just a hair. What's that happening? Nvidia, yeah, it's kind of dangerous. Let's see. Let's move on to, what was your other one? Tesla. Tesla's pretty interesting. Let's load this up. This one, we'd like to say Tesla likes to do Tesla things, and it's no surprise for us here. Tesla did have a pullback. Got an open mic there, buddy. Let me mute you. Yeah, let me remind y'all, if you have a red mic on your name, that means at some point you had an open mic, so I had to mute you. So if you want to be unmuted, just let me know. All right. So for Tesla, you actually had a nice little weekly move here on decent volume. We'll see if it can hold and break above. I'm trying to remove that. All right, so you got a gap up to the upside, 281. If you break 281, you got a nice little gap fill to 291. That would be a pretty sweet 10-point move. You do have an hourly squeeze here that I am paying attention to. You can see that every time it's come back into the hourly 21, we seem to be bouncing off of that and using that as our next spring forward. So I definitely want to watch to see if this 281 level can break to the upside. I am kind of weary that you're kind of pushing higher without developing too much support here, and you got some air pocket between the 21 and the 50. But with that being said, though, you are getting this nice daily cross here on the 2150. Maybe we can get a break higher and start to trend. But if the overall market is going to be giving us some headwinds, it's going to make it harder to play the breakout. So, day trades continue to be your friend. If we do get this move above 281, just have your stops ready and be able to take profits quickly and effectively. Raise your stops as you go. But I do like the setup for Tesla. It's got a nice weekly close compared to the rest of the market, and we'll see if it can push on ahead. But I don't see anything too wrong here other than the fact that it's possibly extended on the daily, but the hourly continues to look pretty darn good. So I definitely like Tesla for an upside candidate. Meta definitely had a gross day on Friday. And as you can see, we've played Meta a few times this past week. It's not too clean here. You know, if you compare it to other names in the communication sector, such as Google, Google looks probably a little bit more cleaner than Meta. Here on Meta, you did get that nasty pullback. I mean, we went from 312 all the way down to 300. That's a nasty 12-point move. Yeah, down 3.6% on Friday, holding the 21 EMA, but, you know, you're in a daily squeeze. You don't have too many signals here. If she wants to puke, she's got room to about 293.5. That's where your next minor support level is. And we'll have to go from there. 293, that's just a level there. We can get rid of that. Then you got about 275. So if Meta wants to come in further, it definitely has wiggle room to do so. I don't see any negative divergence here, so that's good. And you still have positive thrust, but if we start to get a down arrow here, we could easily start to slide even further. So yeah, and plus if you look at this weekly candle too, on this left-hand side, you can see that's a nasty little shooter candle here, and sellers were confidently able to shoot this on down below 310. So I would actually be looking for some downside potential here on Meta if things get nasty. And that's kind of where we are with the broader markets. We're at some pretty interesting headwinds right now, and it doesn't look too comfortable to go long. So of course you can day trade both long and short. And if you do, you know, just be quick about it. You know, don't be afraid to take profits as you see fit. Debating if you take profit on MA MasterCard. Yeah, I like MasterCard. This is an all-time high name. It didn't have that breakdown like Visa. Visa had that news with an offering or whatever they're trying to do there with Visa. Visa looks like it's trying to break down. But MasterCard, yeah, pretty good stuff here. You're at the highs. You're trending pretty well. Now, the daily momentum has shifted. You did have this nice daily squeeze here. You did fire long, and now that is over. And we're trying to digest and shift gears. Not really shift gears, but just see what the next move is as far as the market goes. But as you can see on the weekly chart, you're still in bullish territory. You're still trending higher. Nothing really bad to say about this chart other than the fact that, yeah, you've had the nice bullish run. The daily squeezes run its course, and you're pulling in. You're consolidating to figure out the next move higher. So if you do break above 418.60, I would target this weekly 3 ATR at about 430. If you do start to see a breakdown, make sure you don't break below the daily 50. If you look at this chart, you can see that it does pretty much respect the daily 50 pretty well. So you don't want to see a daily close below 401, 400 on MasterCard. So that would be, you know, my hard stop there on MasterCard to let me know that this trend is possibly over, and it's just time to figure out where to put that money to work elsewhere. Weatherford, WFRD, I think. Yep. 401 is too much of a loss. Then let's see. Excuse me. All right, so if we want to look back on LMA, you could use the 21 to 409.50. Yeah, 409.50 if you want to use a tighter stop there. WFRD Weatherford. I haven't looked at this name. Man, look at this thing. This thing's on crack cocaine. Yeah, we'll take a look at Netflix. Yeah, Netflix is naughty. I'll go ahead and tell you that. Netflix has issues. Weatherford. What's the question? Do we see any pullback on Weatherford? Large volume on Friday. You're at +4 ATR, +5 ATR on the weekly chart. You can see that the weekly squeeze has fired long. And yeah, this gives me vibes that people are chasing at this point. Yeah, let me see. What do we got here? Making sure I don't have any kind of bad signals here. You're in a new hourly squeeze. If you start to get a breakdown below 94.60, 94, I'd probably get out at that point, just because it gets a little bit naughty. But yeah, I can't chase up here. I don't have any kind of position on this. But yeah, what a bullish trend. If you get a pullback to 90, that could be an interesting play, but I can't buy up here. If anything, if you're looking to be a buyer, buys at 90, 91. If you're looking for a stop, I would still use this as my stop. Last time you came to the 21, actually past few times, look at that. Boom. Once this trend started to get going, you respected the 21 EMA pretty darn well. Even the weekly 21. If you need a bigger pullback, 77 here, that would be a much deeper pullback. But you're at plus like 5 ATR. You're into outer space right here. It's going to come to Earth at some point, but at the same time, I'm not going to step in front of that freight train, nor am I going to try to buy at the moon. I got to see a pullback. So 91 to hold. If you get a close below that, to me, it's kind of over at that point. Is it pulling back? Yeah, you've had lower the past 3 candles, so you had a good close on Friday for sure, but I would just be a little bit more cautious at these levels if you're in Weatherford. Yeah, if you're in Weatherford, great job. I mean, way to recognize the trend and structure there. Pat yourself on the back. Let's see. Can we look at Netflix? Yeah, another FANG name for sure. Netflix. Pain past few days. Had that news come out. They said that the gaming isn't doing as well as they want it to, which is kind of understandable. You kind of have to battle a lot of competitors there. Netflix, yeah, pretty ugly candle. I mean, we played this a few times last week. You had that breakdown. You had follow through on Thursday. You had follow through on Friday. You have negative thrust here on the daily. Oscillator crossing down to the downside. The weekly chart, a little bit sloppy on the weekly, but you, for the first time in a while, you've got a close below the weekly 21. You do have maybe some support down here at 383, 384. So Netflix does have a little room here if we break this minor support level. We'll put that about right here. That's where we kind of held the line at about 396. Break below 396, that sends you to 383.76. And then it gets a little bit uglier from there. You want to see if that daily 200 holds up at about 365. For the bullish aspect of Netflix, man, what a hard failure up here at about 448.50. You want to see this curl back up and get you back. But for now, yeah, bears are all over this one at this point in time. So Netflix looks pretty darn bearish to me. Maybe a little bit tricky to shorten the hole. At this point, I would be looking for a bounce to at least the hourly 21 and from there go short. But if the day trading opportunity presents itself that this breaks down 396, if this does break down, then I would like to take it all the way down to 383, 384. That would give us maybe even a gap fill, because there is a small gap to fill between that 383 and 380 level. So I definitely want to pay attention to that. So Netflix is definitely going to be on the watch for this week. Yeah, we'll take a look at Apple. Apple, yeah, definitely. I actually wanted to take a look at this one with y'all. Apple, it's in a little mini Darvis box here between 180 and 173.50. If you lose 173.50, it gets a little hairy. 172.50 right here. We'll go ahead and mark that actually. Bloop. And bloop, put that price level there, 172. And then you got a fib level right here at 170, and you got the daily 200 down at 164.75. Everyone knows that new iPhone is nothing special. It's the same as the 14, same as the 13, and possibly even the 12. Just fancier, maybe slightly fancier chip. So we'll see. You know, who knows when the new iPhone sales come out, but that event was lackluster and we sold off. And Apple does tend to sell off during its Apple events, but you're right here at a support level at 173.50. This one's also going to be on my day trading watch list. Y'all know me, I like to play the FANG names. Apple definitely fits that boat. 173.50, 172. 172 gets you to 170, and then below 170 you got pretty much free reign all the way down to about that daily 200 simple moving average. So pressure is definitely on, which is kind of a bad sign for the market because Apple is the biggest market cap out there, and if Apple flushes the bed, then the rest of the market could possibly do likewise. Microsoft not doing anything. It tried to break above 338.50, couldn't, failed, sideways. You're in a new weekly squeeze, which is ahead of the game here as far as setups goes. It had this nice weekly squeeze back here. It fired long. Now it's moved back in. Now you're forming a new squeeze. I like Microsoft long term from a business model and what they do, their products. They're not going anywhere anytime soon. They have tons of cash on hand. So I do like it as a long term. Now, this weekly squeeze is interesting because it also comes with a weekly upward thrust. But for now, it's a little bit of a headache because we are entering a new weekly squeeze here. A daily squeeze with a downward thrust here. So I would like to see a new signal occur. And from there, see if we can't at least get above 350, 338.50 and then 351.50. So that would be my bullish case scenario if we can get above this. But, as far as the bear scenario, if we start to lose 321, that would be your weekly 21. That could be a bad sign that we at least come into 310 and maybe even retest the daily 21. The daily 200 simple moving average. So Microsoft's had a pretty interesting situation. Still got time on this weekly squeeze to set up. It's too early to call it for sure on that. Let's see. So we're watching the FANG names. We're watching Tesla. We're watching Apple, Netflix. Let me give you an interesting one. Spotify. Spotify is actually pretty resilient. You do got an upward thrust signal here. You're at a pretty interesting spot where this was a little bit of a gap fill here between 159.30 and 163. I would like to see continuation here for Spotify. It did have a pretty good day compared to the rest of the market yesterday. So if we do get an upside move, I would be looking for a move above that 159.30 mark to push back into this 163.72 mark, that swing high, and see if we can't get a push up towards 170. But like I said, if the overall market is going to be moving lower with the Qs, Spotify is going to have a tough time making that move higher. Doesn't mean that it can't. It's just going to make it that much harder for it to accomplish that goal. ADI. This is a name that I'm looking for possible downside if we get this break below 175. Now, we did get this move back up to the daily 21. This could be an interesting spot to enter into a swing short with this daily squeeze setting up. So I definitely want to see where things set up within the next day or two. We may just have to wait until FOMC for sure to be getting into our hands dirty for potential swings. But this is an interesting setup that has a decent risk to reward on it. You could have a stop either above the daily 21 on a close, and you would have targets down here at the lows, possibly at 172 and 170. So I think ADI is at a pretty unique spot here with this daily squeeze and with price close to the daily 21. So I definitely want to follow this one next week and see where things set up. Baba, if you want to follow some China names, Baba is at the brink of breaking down. We have gap support here at 86.60. Hopefully we don't gap down through it, but gap fill would be down here to about 82.50. So I am looking for a breakdown here on BABA. We got the negative thrust, and the oscillator is trying to move into a negative positioning here. And we can see that the 21 EMA is starting to curl down. But yeah, this is a pretty interesting level here. It is support. Support is support until it's not. So if this thing breaks, she's going to flush. She's going to get that gap fill at that key spot. So I'm looking at BABA for potential gap fill. PDD, Pin Duo Duo, another China name here. You know, everybody loves Temu. So if you get that break above 100, that could set you up to about 103.50. Are they still going? Are they going to ban Temu or something like that? I can't remember. But all right, so that's kind of where I'm at. SPY, NASDAQ, we're still in a box, but I'm seeing more and more bearish signals out there. And until those signals change, we need to keep doing the status quo of what we've been doing. We've been doing a fantastic job on our day trades. We've done some swings and those have done really well for us too. We've been keeping our stops tight. We've been taking profits quickly. We've been coming home with green pretty steadily. So congratulations. And then of course, if you need help with anything, feel free to reach out. But you know, as far as everything goes, this is a tricky and unique situation for the overall markets. We're sideways. We're in this box, but we're seeing headwinds from the dollar, the rates. Bonds are down there in the catacombs, like I said, and we're just waiting for a clearer picture of the market. But you know, I definitely give most points to the market bears, and yeah, they have the opportunity in their pocket. If they want to take it, it's up to them. So if that does occur, then we'll start looking at some swing shorts and playing the bounces to the downside. So that's where I'm at. Bulls, they have a lot of work to do. But yeah, we'll continue to day trade. For anyone who lives under a rock, Ace is going to start his small account challenge tomorrow. And his challenge alert chat there. And he'll also be on voice to Signal. So he'll be on voice and he'll be sending his alerts in his challenge chat there for everybody. So be sure to be ready for that. I know there's a lot of hype on that. So let's have some fun with it. Let's have a good week. Any questions at all before we end the session here? I appreciate the questions so far. Yeah, good ticker request. Yeah, a lot of those names, especially the Fang names, are on my block for the week ahead. FOMC on Wednesday. Do not forget Powell to follow at 2:30 p.m. We'll see what happens. Anything goes when it comes to Powell and the market reaction. So we'll see what happens. We are expecting the no rate hike, though. No rate hike at all. That's the anticipation. I see a few people typing, so I'll let y'all type up, and once we make sure that no one has any other questions, we'll end it there. I appreciate you, Tybalt. Yeah, I appreciate y'all's taking y'all's time. I know it's Sunday evening, and if you're on the East Coast, it's at 10 p.m. Eastern, and I know there are things you could be doing, like getting ready for bed or, you know, getting ready for work. There's football on, there's, you know, the kids, etc. But you're here listening to me and seeing what's going to be happening with the market. So I definitely appreciate y'all. There's so much stuff that you could be doing, but you chose to be here. So I want you to know that I appreciate your time in being here. That means a lot. Yeah, and I appreciate you putting in the effort to learn and seeing where things may go in the days ahead. But we got to get that cash. Got to get that money. All right, we'll end it there, guys. Right at 1 hour. I appreciate it. Y'all have a great rest of y'all's evening. I'll send out my watch list here in a second for tomorrow, and we'll be back at it tomorrow morning. Me and Ace and Amar and everybody else will be live for the trading session, and look for some good plays. So, all right, take care. Have a great evening. Have a good night. See y'all tomorrow morning. Take care. Bye bye.